Woof! It's Snowball, and today the tape did something funny. 2 straight days of missiles flying over Iran, and stocks just yawned and went up. But down in the filings pile, it was chaos at both ends. A single penny cost PepsiCo dearly, a little blue can blew the doors off, and a drug trial drove straight into the wall. Grab a treat, let's dig in. First, the scoreboard. Day 2 of American strikes on Iran, and the market shrugged it off completely. The S&P 500 climbed 0.8% to 75.43. The Nasdaq jumped 1.3% to 26,200. The Dow added 0.25%. And get this, oil actually fell back to about $72. And the fear gauge, the VIX, dropped more than 6% to a 15 handle. Positioning ran the day, not the headlines. Chips led the whole pack, sniffing out a big chip debut coming Friday. Story 1, and it is my absolute favorite, WD-40. Yes, the little blue can in your garage. After the close, it dropped a monster quarter. Sales up 24% to $195 million. Earnings of $2.33 a share when Wall Street only wanted $1.58. That is a 51% beat. Every region grew. They raised their guidance, and the stock went absolutely nuts, popping 15% in extended trading. Now here is the fun part for us. Before the print, the options market had priced in a move of about 7.5% by the middle of July. The stock did 15. That is roughly double what the options were braced for. A genuine, jaw-dropping surprise. That 15% is an after-hours mark, so it is provisional until tomorrow's close. But tonight, a squeaky can outran the entire options market. Story 2, PepsiCo. This one stings for a completely different reason. The revenue was actually fine, $24 billion, up 6.4%, a clean beat. But adjusted earnings came in at $2.20, and that missed by a single penny. 1 penny! North America beverage volume fell 4%, and the stock closed down 3.3%, sitting within about 3% of its 52-week low. And the kicker for us? The options market had priced a 3.3% move, and the stock moved exactly 3.3%. Dead on the nose. They called PepsiCo right to the decimal. Story 3 is the scary one. Ionis Pharmaceuticals. Its big late-stage heart drug trial missed its main goal, and when a trial fails, there is nowhere to hide. The stock collapsed almost 24% in a single day on about 12 times its normal trading volume. One data readout and a quarter of the whole company's value gone. That is the difference between an earnings miss and a science miss. A penny you can win back next quarter. A failed trial you cannot. Story 4, a deal that died. The $3.7 billion merger between Getty Images and Shutterstock, the 2 giants of stock photography, was officially terminated. Britain's competition regulator wanted Getty to sell off Shutterstock's editorial business as a condition. Getty's board said no. The deadline passed, and the whole thing collapsed. No breakup fee was disclosed, and Getty shares slid 5% all the way down to 78 cents. Sometimes it is not a rival that bites your deal, it is the regulator. Now the watch list, what the options market is pricing next. Tomorrow morning, Delta Airlines kicks off airline earnings season, with the options braced for a move of about 4.7%. WD-40's fireworks are still settling into tomorrow's close. Then next week, the big banks report, ConAgra lands on Wednesday, and Tesla's second quarter numbers hit on the 22nd. Plenty of bones still buried. So that's the day. A penny sank PepsiCo, a garage can flew, a trial broke a stock clean in half, and a photo mega deal fell apart. Beating the number is never the whole story. It's the guidance, the trial, and the regulator that really move the tape. I'm Snowball. Come back tomorrow and we'll do the whole bowl again. And hey, I love you!